I'm an architect and interior designer, and I focus on renovations of multi-million-dollar homes in Miami, Florida. And my husband and I just invested in our first short-term rental. And my goal is to buy 1 or 2 properties per year for the next 5 years and basically renovate them. And, that's going to be basically our plan of retirement. And this makes such a huge to be able to pay something, because in my mind, I'm thinking, okay, this is all going to be for my children. We're going to take 30 years to pay these houses and they're going to enjoy the life. But I'm happy because that eventually we are looking to create generational wealth. So there's 2 specific questions that I have. I know you just mentioned that not everybody qualifies for your program. And I have seen other videos of yours where you show that I can see people that have like 10 mortgages or 8 mortgages that, your system helps them to basically see which, how to manage the money, basically to make the most efficient payment on each, based on the time and so on, and the income as well. We have a great income as a couple with my husband. And we have our first home is 100% paid. Now we have this investment property and we haven't made the first payment yet. Our first payment is going to be June 1st. So I'm already thinking I have to pay 2 days earlier because of what you just said. And I don't know if I'm understanding the concept correctly. That's one question. And then the second question is, in another audio, I heard you saying if you're going to get a car loan, instead of getting a car loan, if you have an opportunity to do a line of credit, and like I said, our home is probably valued at $2 or $3 million right now because we bought a long time ago and the Florida market exploded. So we can take money from our line of credit to pay easily. I need to get a new car because I have a lease that expires in 2 weeks. So I want to understand what were the benefits of getting a line of credit instead of just getting a car loan. And also see if we would qualify for your program just having one mortgage to manage, or is your program better for people that have? I personally don't have any debt. I pay all my credit cards 100%. My husband may have maybe $15,000 in debt, but he has an income of $250,000. So, it's something that he can easily pay, I think.
Okay, Miss Patricia, we're going to help you. We're going to put some information on the screen for you right now. And not because that you have the same name as my wife, Patricia.
Patricia.
See, my wife's from Costa Rica.
Oh, okay, great. I'm from South America as well, from Bolivia. Unfortunately, I'm actually driving. I would just drop my daughters, so I'm not in the screen. But I can go back and look at the recording because I know you post this on YouTube channel, correct?
That is correct. So we're going to go over your numbers so that you can actually see it later.
Okay, wonderful.
Would you like that?
Yes, and I can follow. I follow a lot. I listen to this when I take my daughters to school after I drop them, so I can follow your numbers because I go back and see them later.
Well, listen, you've seen us do this several times, but I'm going to go over some of the basics just for somebody that may be new in the audience. All right? Would that be okay?
Yes.
All right, so I'm going to ask you some questions I know you know the answers to. All right, so how much is your new mortgage right now?
My loan is for 560.
560, okay? 560,000. And what is the interest rate?
3.75.
3.75. Okay. And so I'm just putting down just the principal and interest payment on that loan. All right. So that's all we're going to be working with because we can't pay the loan off, obviously, with the taxes and insurance. Correct?
Right.
All right. Very good. So we're going to go ahead and get that on the screen. All right. So our payment is just the principal and interest is $2,593.45. Okay. So the interest portion on this is $373,642. That's how much interest the bank wants. I can tell you right now, you qualify for our program.
Okay.
Okay. Just by looking at that, because it's all about interest savings. Okay. So if we look at this, instead of 373,000, let's see if we can help you to pay less than $120,000 in interest instead of 373,000.
Okay.
Okay. And depending on your income, it could even be less.
Okay.
So if you could save that kind of interest, yeah, it would be well worth it, even if it's just the one mortgage, because we're going to help you to not just willy-nilly throw money at the debt, but we're going to put you in a position so that you can save the maximum amount of interest per dollar. And you'll be able to refi on that loan years sooner to pull cash out to put down payments on your next properties. And I said properties in plural.
Yes.
Okay. Is there any other question you have for me today?
Yes, I had the question about the car loan. I don't know if you're speaking about that. If
Yes.
you mentioned that it was better to get a line of credit.
Okay.
To understand why I'm getting a car that is above 6,000 pounds, so I can write it off 100% for my business.
Look at you. I love that. All right. Now, you could take out a loan for that. Okay.
Okay.
All right. But if you get a line of credit, that's considered mortgage interest.
Okay.
Mortgage interest
I
has.
don't know the difference between that and a car loan interest, I guess.
Okay. So mortgage interest has a potential of being tax deductible.
Okay.
But regular car interest does not if you just get a car loan.
Oh, I see. Okay.
That's just one thing. The other thing is that you're able to continue to reuse that money. It's a revolving loan. So when you get a car loan, once it's paid back, it's done. You have to get a new loan. But if you get a line of credit, you can pay the loan down and then reuse that money. Let's just say that you paid the loan down by a considerable portion, but did you realize that money was still available to you on a line of credit? Let's say I paid this loan down by half, all right? But an opportunity came up to purchase another property and it's time sensitive and I need to grab it right now. You could actually dip into that line of credit, pull out half the money you paid on the car, and then put that on your investment. On a car loan, you don't have that option. You can just pay it off, but you can't actually reuse that money. Does that make sense to you?
Yeah, it makes sense.
Plus,
same with the line of.
Go ahead with your question.
I was saying that could you do the same system with a line of credit? Because we actually have a line of credit right now. It's a small, it's just for 250. We've used 100 of 80 of it. Like, could you do the same system paying off the line of credit? Like if we pay early the line of credit, we also save money. Is it the same as a mortgage?
Most definitely. And not only that, you want to be able to save some money. We can tell you exactly how much interest you're saving each and every time you make a move towards that line of credit or towards the mortgage.
Wonderful.
You will know exactly how much interest you're saving each and every time.
Wow, that's great. Yeah, looking forward to learning more. So how do I connect with you?
All right. All right. So you would go to the link, ice10k.com, and then it'll let you into our financial form. Fill out the form, and someone will be calling you usually within 24 to 48 hours. Okay. And then once you get that call, then they'll set up a consultation, and then you will know the month, day, and year you will be debt free. And if you're a buy and hold investor, we can actually help you to determine when would be the best time to cash out refi in order to purchase other properties.
Great. That's great. I'm looking forward to connecting with you guys.
Oh, listen, I'm looking forward to working with you as well. And see, that was two things. Did you have a third?
No, I think that's all I need for now. Yeah. Thank you so much. I really, this is incredibly valuable. I'm sharing all of this with my brother and my friends. So I'm super excited to, to share this information because it's not only beneficial for us, but for other people, This is great. I applaud you and everyone that is sharing this information to help people, create generational wealth for their families. So thank you so much.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.